We all use products from companies like Apple, buy things from Amazon, and use Microsoft and Meta apps daily. But when it comes to investing, we rarely think about them. Now, I may not really know why people don't think about it, but if you're someone who is willing to, I can surely tell you how you can invest in the biggest companies of US while staying in India. So let's dive right in. If you want exposure to global trends, investing in the US stocks is a smart move. The first method is direct investment by opening an account with a broker who can give you access to the US stock market. These brokers can be Indians who have tie-ups with US brokers who can give you access to the US stocks. Or you may directly open an account with the US brokers and trade in the stocks listed on the US stock exchanges. But before you choose this method, please be aware of three important things. First, sending money outside India through a broker comes with its own set of risks, especially if you don't choose a reliable platform. Also, under the LRS, that's your Liberalized Remittance Scheme, you can only invest up to $250,000 in a financial year. Lastly, this money cannot be used for speculative instruments like options or futures. Next up, we have the mutual fund route, which is one of the best options for beginner investors. Many Indian mutual funds invest directly in US stocks or through a fund of funds, that's your FOF. Now, FOF is a type of mutual fund that invests in another mutual fund, giving you easy access to the US market. Now, why I find this more convenient is because A, professionals take care of the stock selection for you and your money is spread across multiple US companies, thereby reducing the risk. This method has its own limitations though, as Indian mutual funds have a limit on how much they can invest in foreign equities. So these options may not always be available. And you also have to keep a check on when the investing window is open, making it even harder. However, despite this, mutual funds remain one of the safest and most convenient ways to invest in the US stocks, especially for those who don't want to actively manage their investments. Now, coming to the third option, which is the ETFs, that's your exchange traded funds. Now, ETFs are similar to mutual funds but can be bought and sold on the stock exchange just like individual stocks. These are some of the most traded global ETFs in India. The good thing about them is that you can trade ETFs just like stocks, so you have real-time control over your investment. Moreover, ETFs often have lower fees than mutual funds, which usually charge up to 2% in the form of the expense ratios. The only drawback with ETF investing is that you may face liquidity issues if the ETF isn't traded frequently. Finally, there's the Gift Nifty route. This is available on the NSE's International Exchange, where certain brokers buy US shares and issue the depository receipts. You can buy and sell these receipts, which track the price of the underlying US stocks. Now, the advantage of accessing the US markets in this way is that since it's regulated by the Indian exchange, it is comparatively safer than other routes. Yet, you must remember that your money will be converted to the US dollars first, so there can be additional charges of the currency conversion, which can add to your already higher broker charges, thereby increasing the cost of transactions. Also, only a limited number of stocks are available in the NSE International Exchange, as well as the liquidity may be lower compared to the actual US market. So, these were the four methods that you can use to invest in the US stocks. So, whether you prefer the control of direct investment, the ease of mutual funds, the flexibility of ETFs, or the new Gift Nifty route, there's something for everyone and you can choose the option that works best for you. If you found this video helpful, hit that like button and subscribe for easier understanding of all things finance.